Dawn, its full name is Distribution Warehousing Network Limited, but it's a manufacturer and distributor of quality branded hardware, sanitary ware, and all that sort of stuff. It's got a market capitalization of around 2 billion rand, price to earnings ratio of 15, not currently paying dividends. Yeah, and this one really had some tough times. Yes. They were a little bit overextended. They had to do a rights issue. They had some funding and finance problems. But, I mean, underneath it all, they've got some excellent brands. They dominate the plumbing supply market almost entirely with DPI plastics. That's the white plastic everybody uses to do plumbing. They own brands like Vol, which is obviously sanitary ware, but then also Cobra Taps and Safa and all that stuff. They rolled up a lot of the independent plumbing and sanitary ware sort of suppliers. Yes. So, I mean, right now they're recovering. Earnings have picked up substantially, earnings like 60–70% up. But you can see it's had a bit of a torrid time.
Indeed.
Are you ready to give it anything by way of a tip at this point?
Well, a couple of things that I did like was the fact that they are expanding outside South Africa.
Yep.
And it looks like they're really going at that. There's a little bit of intergroup selling, cross-selling.
Yes.
And I'm not sure if that isn't a bit of a warning. You know, it's one way of making the stockpile seem lower, but is it actually getting out into the public area?
Yep.
So I'm uncertain about that. So
yeah.
I can't go hot on that.
Yeah. They've got about a 33–34% shareholder, which is an empowerment group that got put in place. The management team has stayed in track and in place throughout this era, so that's perhaps a positive. Yes. I don't know, it all depends about the broader environment we're heading into. I mean, if you're optimistic and positive about the outlook for the South African economy, and you think we're going to do fine and there isn't going to be a problem with lower end credit lenders and there aren't going to be any explosions or blow-ups or blowouts there, and you think, you know, public sector employment could continue to grow, earnings could rise because, you know, tax revenues are rising and everything goes well, this is the kind of geared player which could do well. Because I've no doubt that this pattern was probably reproduced over there. You know, before 2009, it also shot up to $15, so it could do that again.
You know, really, Paul, I don't think there's a hurry. And after all, if the minister says we're looking at overall growth of about 2.5%,
I guess,
then that just says that there may not be too much exciting for a while. A couple of years out will be another matter.
So there could be a period where normalization of earnings happen, but it's not just a one-way track upwards.
Yes.
Okay, so you're leaning towards not hot still.
Correct.
Okay, I'm going to go with that too. Sounds like a well thought through argument.